Hello, welcome back to my network. We're back with Canada Nickel, and I'm with the CEO, Mark Selby, and Director of Investor Relations, Katrina DeMundi. And joining me as my host is Rod White, the sophisticated resource investor and current shareholder of Canada Nickel. Rod, you've called us all here today. What was the initial thought around this, and really what was the initial questions that you wanted to run through with Mark and Katrina?
Well, I think it's very important because I've been following nickel for over 50 years. And first there was the Poseidon boom, which was triggered both by supply shortfalls caused by strike at Inco in Sudbury and the advent of Japan as a significant new consumer in the beginning of that first Japanese boom. And we haven't had a boom since, but there's been chronic underinvestment over the last 15, 20 years. And this, in my opinion, has been caused by China developing and financing large new sources of supply of nickel laterites in Indonesia and the Philippines. But what I think investors don't appreciate is that a lot of the world can't use the nickel laterites. They need nickel sulfides. And nickel sulfides was the boom in 1969-70. And I think it'll be nickel sulfides driving a boom in the next 5 years or longer. And it is because the EV boom that's underway requires nickel sulfides. So car manufacture and battery manufacture and stainless steel, incidentally, all need new sources of supply. And I latched onto Canada Nickel because Ontario has got the greatest endowment of nickel sulfides in the world, to the best of my knowledge. And Canada Nickel, which is a $240 million capitalisation company, has got the largest land position and a project with a net present value of $2.6 billion versus a $240 million capitalisation, because investors have not been able to differentiate between the two types of nickel, and this includes most stockbrokers and most media. And I do think that China is very much supporting the contention that nickel laterites will support the world. But, Mark, I mean, you're the expert, not me. I'm just an investor. But with the two types of nickel, can you differentiate between them and explain whether or not I'm on the right wavelength?
Oh, no, most definitely. I mean, since 2016, China and Indonesia using nickel laterites have basically, they're more than 100% of global supply growth in that time, which means, you know, nickel supply from the rest of the world has actually shrunk during that time. You know, at this point in time, nickel demand's growing at more than 10% a year since 2020. So we need almost 300,000 tons of nickel a year. And so, you know, that's basically about 5 times what Sudbury produces, Inco would produce in Sudbury today. So there, you know, in terms of the types of nickel and how they come to market, you know, laterites are basically, you know, effectively soggy dirt. And each ton of soggy dirt has about 1% nickel in it. It's easy to mine because it's you just digging up dirt. But in terms of processing, you either need to use a huge amount of energy or a huge amount of acid to basically pull that nickel out of that mineral. And unfortunately, in Indonesia, you know, that energy has been all provided by coal-fired power. Then you need to use a lot more coal to then turn that nickel into metal. And as a result, you know, the footprint of some of the nickel laterite is 50 to 80 tons of CO2 per ton of nickel. On the other side, in terms of the leaching process, you're using sulfuric acid to dissolve the nickel out of solution. It comes with a lower carbon footprint because you're not using as much electricity to do it. However, you end up with more than 1 ton of tailings for every ton of rock you process, and these tailings are active. They need to be stored properly, and the challenge in a place like Sulawesi is that it's a highly seismic area with monsoon climate, and so the ability to safely store those tailings, I think, is a big question mark and is hanging over the industry. Underpinning all of that all of that nickel is basically mined in a way that's not environmentally sustainable right now. You've got massive sedimentation issues as they're basically not revegetating the land properly. So you've got huge runoff into local creeks and streams that ends up making its way to the ocean and having a huge impact. I would encourage people to go look. There's been a number of good videos now highlighting the kind of environmental devastation that's going on.
I think you could say there are two types of nickel: dirty nickel, which is what the Chinese are using and developing, and clean nickel, which not enough people. And this is a very important point, is you're talking about a supply, an incremental demand and shrinking supply, but we do not have the projects in the pipeline to deliver. So we've got governments that are making all these declarations about going green, and IRA in the US, and putting 100% tariffs on Chinese automotive manufacture. But where's the credibility? Katrina, I think you spent a lot of time looking at this issue with governments. How do we get new, clean nickel? Is it not what the governments really want, as well as the industry?
No, I think absolutely the governments want that. And Mark has very strong ties with the Ontario government, with George Peary, who's Minister of Mines in Ontario. And I think you can see that the government is spending a lot of time and energy trying to secure supply for critical minerals. And a lot of battery plants are being built in Ontario. I think it's becoming the North American hub for car manufacturing and EV batteries. So just last month, the Honda actually announced that they're building a $15 billion battery plant. And the government is actually putting towards that tax incentives. So I think it's around $2.3 billion in tax incentives that they're putting towards building this plant. And that's a plant that's joint ventured with POSCO and Asahi Kasei, which is a chemical company. And that's going to generate thousands of jobs. And also they're going to produce 240,000 electric vehicles per year. So that's just one of many battery plants that are getting built in Ontario.
Yeah, that's a statement of intent. You can't build them unless you've got the supply of nickel sulfide.
I think one of the key pieces there, Ontario, I don't think a lot of investors globally realize that Ontario is one of the few places in the world where you actually mine critical minerals and produce automobiles. And so both the Ontario government and the federal government in Canada have very clearly stated mine to EV and fully integrated supply chains, for North America. And so, Canada Nickel, with the land package that we've got, the multiple targets that we have, and basically rail access into each one of those battery plants that's coming online, we're really uniquely positioned to be able to deliver all of that clean, green, local supply that these battery plants really need.
Yeah, Mark, but it's never happened before. Canada Nickel is going to be an integrated producer and processor of nickel. Now, that is a driver of a boom, and that has never happened before in my lifetime, that the two can be developed simultaneously. Peter, have you seen it before?
Well, I've had 29 years of age. I mean, there was obviously there was like you said, there was a nickel boom in the late 60s, and we had a bit of a resurgence, I think, in around 2006, 2007. But I was still in school and not paying much attention at that point. So, look, I think one of the main things, as you know, with Miner Network and my other company, Minute Capital, we speak to a lot of investors. We talk to a lot of investors about nickel. I think one of the main issues that investors always talk to us about nickel is this price differential. They don't often believe this price differentiation. When someone says to them, oh, well, the nickel that's produced in China is going to sell at a cheaper rate than, say, cleaner nickel in Canada. And if you're a libertarian or a free markets guy, you just don't believe that's a possibility. Yeah. And I guess I wouldn't mind just pushing back on that. And I really want to understand this relationship with the IRA, because I think part of this is really it's the subsidies from the government. From my understanding, is subsidies from the government in a way will create a secondary market, because you have to source nickel from certain jurisdictions that produce cleanly to get that subsidy. So therefore you can spend a little bit more on your nickel overall, but in reality, you'll be saving a lot more through the subsidy of creating the entire battery pack. Am I right in thinking that's where the secondary market potentially could come from?
Yeah, no, fundamentally, the market will drive those premiums. And so, what's going to emerge over the next 5 to 7 years is you're going to see a massive increase, basically a doubling or tripling of nickel demand, both in the United States and Europe from where it's been for the last 15 years. You're going to need hundreds of thousands of tons of new supply. And, to be honest, other than, Canada Nickel and maybe a few other projects in the Western world, that demand is going to far outpace the supply that's there. So if there's this much demand for clean, green, local nickel supply, and there's only going to be a certain amount of nickel supply, by definition, those premiums are going to emerge and substantial premiums, in my view, over the next 5 to 7 years. In terms of sort of premiums today, that the thing I think people don't realize is if you look at, because what you see quoted is the LME copper price or the COMEX copper price. But what, again, a lot of investors don't realize is that, there are regional premiums and regional prices globally. And so even today, and for the last 4 to 5 years, across a range of commodities, whether it's carbon steel, whether it's stainless steel, which is where nickel goes into, if you look at aluminum, zinc, other metals, what you see is massive price differentials between, where carbon steel trades for in the United States versus Asia and Europe, where stainless steel trades hundreds of dollars per ton difference between where it trades in the United States versus where it trades in Asia and Europe. And so with the announcement just this week of Biden putting a whole new slew of tariffs on a bunch of critical materials, again, trying to keep China out of the supply chain, is just, again, the value of what we have in the ground in Timmins, and it has just increased, substantially yet again. I think that latest move by Biden should underscore, Western governments want China out of their supply chain. Bottom line, they've provided massive amounts of subsidies, and we're in a wonderful position to be able to get, almost $600 million of just refundable investment tax credits from the Canadian government. Never mind what we're going to get from the U.S. government and a bunch of other government programs that have been announced. And they're going to continue to keep doing these things until they see the supply chain response to see these local supply chains created.
I don't think that they can reverse that strategy, and I think that while investors don't appreciate the scale of what's going on, I think the off-takers in Japan, Korea and Germany well understand exactly what you're saying, that there is an undersupply and they need to get supply for manufacturer of EVs in Europe as well. It's not just in America, but who can they go to? You must have a lot of people knocking on your door, because you were saying 600 million of government support. What will off-takers pay for 20 years guaranteed supply? That's an interesting question.
No, again,
it's not market.
No, we're looking to, we expect our permits by mid next year, shovels in the ground at that point in time, and we'll be in production by the end of 2027. We're really the only large new source of, clean nickel that can come onto the market well before, 2030. We've got plans to expand it further. And again, we've got a land package that by this time next year, we should have 7 additional resources in the district. And so, no, that's exactly what the market's realizing, that, there's only a few real sources of nickel that can come to market in that time frame. And Canada Nickel is one of them.
I wouldn't mind just going back onto this announcement, obviously, with the Biden administration, 100% tariff on EVs, right? I was listening to an analyst yesterday who was saying that this is likely going to just drive more subsidies in China. Where does this game end? Where do you? How does this pan out for commodity markets in general? You're in this trade war scenario. Yep. Looking even back to when there was a Trump-China trade war, how did that pan out? What similarities are you seeing at the moment?
So I think, one of the positions where nickel, again, if investors are looking across in terms of playing, sort of the EV energy transition with EVs, for things like lithium and cobalt, it's basically all in on EVs, right? And that's really driving the market. Again, getting this theme of getting China out of the supply chain, nickel is used in stainless steel. It's used in a wide range of nickel alloys. Again, you don't have an aerospace industry without nickel. And so, even if, if it ends up having some sort of counter impact in terms of the growth rates in terms of the EV market, again, the U.S. government, Western governments don't want critical industries that use stainless steel, critical industries that use nickel alloys like aerospace to have to depend on anything like China or Russia in terms of the nickel that goes into that area. So so for us, if the EV sort of tit for tat doesn't have doesn't come to the exact desired impact, it doesn't really impact nickel that much, because at the end of the day, again, it's this overall theme for the next 10 to 20 years of pushing China out of the supply chain, and nickel is very, very well positioned versus all the other metals to really benefit from that.
Just on that, obviously Trump's came out and said that he agrees with it, but if anything, he would have put more tariffs on.
Yep.
He's leading in the polls at the moment. Under Trump or Biden, you'd say the US is becoming more isolationist. Are you foreseeing that essentially we really are going to see two separate markets, one in North America and one potentially around the rest of the world?
Yeah, again, I would argue that there was so much time and energy spent on Class 1 versus Class 2 nickel, which was based on this false premise that you couldn't take laterite ore and convert it and use it in a range of industries. That the real bifurcation is exactly that. It's going to be Western world supply and a sort of China-Russia block. And again, it already exists. There are massive price differentials across a range of commodities: carbon steel, stainless steel, nickel, aluminum, and so forth. And so those premiums exist today in the market. So for us, where we're not only going to mine the nickel but process it locally, because the governments are as keen as they are to see the mine get built, they're even keener to see the processing plants that we've announced get built as quickly as possible. And so being able to be an integrated producer that can deliver nickel into North America to take advantage of these price differentials, is a tremendous upside, that's not reflected in our economics today.
What's important, Mark, is that with your capitalisation at $240 million and the requirements that a sophisticated investor could work out from the public domain, you're looking at something like $3 billion. So an average investor would never consider Canada Nickel, but a sophisticated or a value investor should, because your Crawford project's already got a bankable feasibility study. Already you're doing all of the permitting and you're doing a lot of the necessary work to bring it into production, but it's like 3 to 3.5 years out. What I see that what Mark has done over the last 5 years, he's basically consolidated all of the known nickel projects that were available in the Timmins camp of Ontario. And it's pretty clear that Timmins is going to be the base for the processing facilities. And the logistics are good, which will enable Canada Nickel to supply most of the US and Canadian demand, but it doesn't extend yet to Europe and elsewhere. But with the 7 projects that you've got and $35 million that Agnico Eagle invested in you through flow-through, you're going to have the biggest nickel exploration program of the world over the next year. And can you give any guidance onto the projects and what you're hoping for?
No, most certainly. I mean, the exciting thing with these types of nickel deposits and what's allowed us to sort of advance Crawford as quickly as we have is that the geophysics gives you sort of 80% of the answer in terms of the scale and the quality of the deposit that's there. And so, we use that to assemble the land package and the property package that we talked about. Crawford is the second largest nickel reserve, second largest nickel resource in the world. And in that land package that we've assembled, we have 25 times the target geophysical footprint that we have at Crawford. And so, that's the kind of scale. We have 10 million tons of contained nickel across all the different resource categories, and we've got 25 times the footprint. Now, we're not going to get 100% hit rate on all those things, but since we started drilling our regional properties, we've had a 94% hit rate. in terms of our holds. That's how well we can use the geophysics to target the kind of mineralization that we've got. So, we had a conference call in February where we laid out those exploration plans, and by this time next year, we'll have delivered 7 additional resources. We think we'll make another half a dozen discoveries. And so, we will have a multiple of the resource base, that we currently have today, which would make, if we are able to be successful, we'd be the world's largest nickel sulfide district in Timmins.
And I don't think investors realize the importance of Timmins and the facilities, the logistics, the infrastructure. I know from my own memory that there is a mill at Kidd Creek which is able to toll mill or mill nickel sulfides. It's there. You don't have to spend a couple of $100 million building it. So the possibility is that you can deliver in some earlier stage, higher grade nickel from several of these projects, and you could truck it to Timmins. It's only 30 or 35 k's, and mill it there, and you could be supplying a processing facility well before Crawford is in production.
Yeah,
am I too optimistic?
No, I mean, there's definitely that possibility, but I think even just more broadly, the infrastructure footprint that we have, most big new metal discoveries are in remote locations where you've got to build water, power, people. We have one of the major east-west highways goes right across, a bunch of our properties. One of the major rail connection to the major rail line in Canada is, basically goes by a number of the properties. We have access to low carbon, and another big dimension of the story is these types of one of the big attractions with these types of deposits is the host rock spontaneously absorbs CO2. We developed our own proprietary IPT carbonation process where we inject CO2 into the material as it's going through the mill. And so our mill, in addition to becoming what will be the Western world's largest nickel sulfide operation, would actually be one of Canada's largest carbon storage facilities. So again, and we do that for a very small incremental amount of cost. Our downstream plants will be able to utilize that capacity, so that next stage of transformation, will also be very low carbon or net zero carbon. So we're in a tremendous position to really be a leader in that whole broader energy transition.
In other words, it's a lot more than is in the bankable feasibility study on Crawford. These are all add-ons.
Yeah.
But Katrina, I think we should ask you. You've got quite a challenging job handling the IR in a disinformed market, but you're also holding the hands of Agnico Eagle. Now, Agnico must be extremely pleased with what Canada Nickel's doing. After all, it's provided the money, and you've got 6 rigs on the go spending the money, going to give a lot of news flow. You're going to be pretty busy over the next 6 months, aren't you?
Yes, Agnico Eagle, they came in earlier this year. They announced on January 2nd that they've invested. So they're the 3rd largest gold producer globally. And they were evaluating, if you even look at their press release when they invested in us, they were evaluating the critical minerals sector for 2 years. And they were looking at Canada and regions that were close to their operations in Canada, within the Abitibi in Ontario and Quebec. So we made a lot of sense for them being in their backyard. And I think the scale, as Mark said, the scale of our Timmins nickel district that we're building was quite attractive to them. Crawford in itself has 10 million tons, both of measured and indicated and inferred. And we think we have multiple Crawford-like deposits within the area. So 6 drill rigs going, as you said, that $35 million that Agnico deployed is going to build out those 7 resources and potentially 6 discoveries over the next 12 to 15 months. I think the scale and the district potential of what we have in Timmins, the Timmins Nickel District, is really what also attracted Agnico. So, yes.
But your shareholder structure is rather unique and rather interesting because you've got the largest shareholder you've got is Agnico Eagle, which is as good an investor as a mining company can ever have. Then you've got Anglo, who saw the opportunity first. And, we're talking about a critical metal here. Copper gets all the publicity, but nickel's got all of the upside. But Anglo is in an interesting situation, being pursued by BHP for critical metals. And then you've got Samsung. Now, how did that come about? I mean, that you didn't ring them up and say, here's an opportunity. They must have found you.
Well, I mean, Mark's made many trips to Korea, so it was a relationship that we developed over a period of time. They're an Asian-based battery maker. They invested in us, a North American-based nickel company. And for them, I think the interest for them is really the offtake. They're looking to secure offtake, obviously, in North America. And they invested $18.5 million in us, U.S. What that means is they also have an option to invest an additional $100 million upon a construction decision. That gives them 10% of the project for 10% of the offtake for the life of the mine. And then they get an additional 20% offtake for 15 years thereafter. So their main focus with us is the offtake. So it's quite a complementary relationship that each strategic that we have has a different sort of objective with us.
But look, this is a precedent. I mean, there are two precedents here. One is the precedent of the strategy in developing additional resources based on the template that you learned from developing Crawford. And the other one is the offtake strategy, because you don't want and will not have one offtaker. But Samsung in Korea has been smart. But I've just come back from 3 weeks in Japan, and I realised just how smart the Japanese are. And I would strongly suspect that the Japanese do not want to take any nickel from China or from Russia. I would have thought that the Chinese would be rather interested in Crawford as well.
Yeah, no, I mean...
the Japanese.
Yeah, the Japanese do. I mean, Japan and Korea, all of the battery supply chain that basically, supplies Western automakers that are not Chinese are Japanese and Korean. And so, yes, no, we're getting, significant interest from both Korea and Japan. Japan has, big trading houses that have whole portfolios of mining investments. They made a number of bad ones back in 2010, 2011, so they've kind of been on the sidelines, for the past decade or so. They've made a few copper investments, but have generally, not been out there doing new investments. But, they realize that there's a whole new sort of, pool of mining supply, of metal supply that's necessary. They've in the past have been, critical partners in unlocking, global mineral supply when it's necessary, and the Japanese big trading houses are back at the table again, making investments. And so
what we know is that there's strong government demand for clean nickel and government finance, and that you tick all of the boxes, including carbon storage, which others don't have.
Yep.
And that there are off-takers that are unable to get their nickel supply from Western Australia anymore because of differential pricing in nickel. But the off-takers know that the nickel is and always has been available from Ontario.
Yep.
And that this is going to come again. So the milestones that you got coming up, you've got updates coming on the drill programs. You've also then got a new feasibility study to come, which will take other things into consideration. But you're going to have so many people knocking on the door when you've demonstrated the route to nickel production.
Just before you go into that as well, obviously you've just released some results on the other target, Man, right? And it seems to be a little bit higher grade, and also the recoveries seem to be a little bit better than Crawford. Am I right in saying that? You're redoing a feasibility. How can you tie in? What's the point in doing all this extra drilling? Obviously, I know Agnico's giving you, but is there still a route where you can change what goes into the initial mine plan at the moment? And I guess, or is this all just backdated stuff that you'll get round to mining 20 years, 30 years down the line once Crawford's been mined out?
Yeah, no, it's not sequential. North America needs, if you just look at the battery plants under construction, North America alone will need 200,000 to 300,000 tons more nickel, over the coming decade. Europe will need hundreds of thousands tons of more nickel in the coming decade. the reason we're doing this is we're not just talking about, Crawford is two-phase expansion. It'll get to just under 50,000 tons of nickel per annum. We're really looking, and if you look around and see what other Western supply come on, the list is, you can count them on one hand. And so, we want to position ourselves as becoming, what Sudbury was to the world in the first part of last century. We want to be the Sudbury of clean, green, low carbon nickel, going forward. And if we think what we have in the ground is there, then we can take the template that we've used with Crawford and roll it to these other deposits. So with Man, we, again, in the release, we stated these were higher grade than average. We just wanted to say, basically, can we take the Crawford flow sheet, cut, paste, run Man through it, and get this, get good results? Yes, we did. We did that a year earlier with some of the initial drilling we did at the Reed deposit. And, it worked just like it did. We've put out results on Reed that look, as good or better than what we have at Crawford. And so, in my view, what we're looking for, that hopefully in 10 to 15 years, you're going to see a half a dozen Crawfords emerge, from the Timmins camp.
But
and
what that means, Mark, is that Timmins is going to be the world-leading supplier of clean nickel.
Yes, 100%.
And that used to be Sudbury.
Yep.
60s until 20s all.
Yep.
Timmins is going to take over. The government is very much in support. The Minister for Mines of Ontario is a Timmins resident.
Yep.
There are key people in Timmins that can make it happen. And the Kidd Creek mine is closing down, which is the largest employer in Timmins. So with a processing facility to be built on the Kidd Creek site, with the mills and the logistics and all that go together, it takes 10 years off the wait for a new nickel producer. And once it's established, it can handle more. The capacity that it can handle is a lot more than is stated in your bankable feasibility study.
Yeah, we're designing the downstream processing plant. We're actually, the target is to have the nickel processing plant up and running by early 2027 in advance of Crawford. We can handle a range of feeds. It's basically a process that uses, existing proven technology that we used. Our team worked at Inco back in the day, and so we're using very simple, proven processes that'll be able to produce a product that can either go to the battery market or can go into the stainless steel and alloy market. And we'll be able to take a wide range of feeds into what we think is going to be a relatively low-cost process to what, the costs that Glencore, BHP, and Vale incur. And so, we think, not only is that processing plant going to be key for our mines that we're going to build in the region, but, help be a processing hub, to help feed what's needed in North America.
Just obviously going back to Sudbury, what was the sort of max output they were having in their peak?
At their peak, Inco maxed out in the mid 1970s at about 400 million pounds, about 180,000 tons, and that was from their Sudbury and Thompson, Manitoba operations at that point in time. So, my personal goal is hopefully in 10 or 15 years that we see Timmins overtaking that kind of production level.
Okay, but initially within the next 3 years, you're looking at around 50,000. 30.
Yeah, first phase is just under 30,000. Second phase takes us to just under 50,000 tons of nickel per year, and that's for 40 years in the feasibility study. And the resource remains open at depth across several kilometers of strike length. So there's the potential to extend that mine life substantially. And again, we think we can take the engineering that we've done for the process plant at Crawford, and then cut and paste that into that hopefully several deposits that we'll have identified by this time next year.
Well, that makes sense given that obviously metallurgically speaking it looks very similar. We spoke to Steve, your VP of geology, whilst we're in Toronto, and he made it pretty clear the rocks are all pretty similar, so that's good. One of the things that we haven't touched on, I know we're quite short on time, but I wouldn't mind just revisiting this downstream opportunity because to me, this is one of the most exciting parts of Canada Nickel, and it's a shame we haven't been able to spend a bit more time on it. But remind us what it is, just very quickly, and then I wouldn't mind what you can, because you haven't disclosed too much yet, but what can you disclose about it? Because this to me is just as profitable a venture as Crawford or anything else.
Yeah, so we produce two concentrates. We produce a nickel concentrate and then a magnetite chrome concentrate that also has some nickel in it. So, the nickel processing plant, again, within the sort of Inco network of refinery assets, and Mike Cox, who's leading that set of operations for us, basically oversaw that global refinery network, for more than a decade. As I said, there's some simple pyrometallurgical, very low environmental footprint processes that we can use to take that concentrate and again get it into a relatively high purity nickel and nickel-cobalt product, depending on the feed that's in there, that we believe will be very suitable for both the battery and the stainless steel industry. We're not talking a lot in detail, because we just, we think we've got a head start here and don't want to, I think people can figure it out, but, we don't want to provide too much detail, at this point in time in terms of exactly, in terms of what we're doing. On the conversion of the, magnetite nickel chrome product, at the end of the day, stainless steel and a whole pile of alloys, there's whole families of alloys that use iron, nickel, and chrome. And so if you've got a product that's got those three things in there, it just makes sense to be able to convert those locally. Again, those premiums for carbon steel and stainless steel in the U.S. versus other markets just says these markets need more conversion capacity, to produce these kinds of metals in North America. And so, again, it'll be, we announced a couple months ago we're working with Metso on the nickel plant, and SMS. There's a handful of people who build these plants globally, and SMS. We're quite excited about being able to do it. And again, we can take the carbon emissions from those plants and store them in our tailings. And so, not only will we be producing these products, but we should be able to do it in a way that's, zero carbon or as close to zero carbon, as possible. And so, again, we think it's a tremendous opportunity. Timmins as a community likes downstream processing and is encouraging us. And so whether it's a Kidmet site, we're still have to negotiate that deal with Glencore. If it's not that deal, there's other industrial sites in the region that we can use and take advantage of.
What I see is that a $240 million company as a leader in nickel can be $1 billion company, not just from what Canada Nickel is doing, but because of the government support and the off-taker support to build a processing facility without any demands on equity and upscale it. So you are going to be financed and built up by off-takers and governments, not by private investor money. And if investors listen to this interview, they will realize what a unique value proposition Canada Nickel is, with a management that can deliver.
Yeah, people don't realize that we're in a 5 to 7 year window here where there's all of these government credits, government programs available. Offtake people want this supply. And so we can use their capital to, without using very little additional shareholder capital, if any, and then build these assets that are going to be around for 40 or 50 years. Having free leverage in any equity investment is, should be a no-brainer. But I think people have missed what this fundamental opportunity. It's a really a once in a generation opportunity right now.
Just to touch on as well with the downstream. Obviously, you didn't want to give too much away. There's a lot going on, but you're looking at funding this, I think, towards the end of this year, early next year. So surely when can we get a bit more information on it?
Yeah, no, you'll get more information by year end, early next year for sure. Yeah, most definitely.
Good. And just before we do finally wrap up, what are we looking out for? Obviously, you talk to me about your marketing schedule. Talk to me about what we are expecting in the next 6 months. Obviously, we're in London. You're at 1-to-1 this week. What's things looking like over the next 6 months?
Yeah, I know. I mean, there'll be a whole pile of investor conferences. We're looking to get the story out more broadly globally. In terms of news flow, again, we've got $35 million, 6 rigs going, so you're going to have a huge amount of news flow coming from that property package. We've got milestones in terms of permitting come up, one by the end of the summer in terms of the impact statement. We expect to have permits, about 15 months from now at the outside. you'll see on the joint venture government funding, series of announcements towards the end of this year, early next year, getting that funding lined up. So it's going to be a pretty jam-packed year.
Yeah, I think we can wrap it up. It's a unique value proposition. Canada Nickel will be the leader in the nickel boom, and it will be a Timmins nickel boom, and it will be bigger, I think, than the Sudbury nickel boom of last century. And Canada Nickel is unique, and certainly it's one of my core investments.
Exciting times. Okay. Katrina, Mark, Rod, thank you for joining us.
Thank you.
Thank you.